From Orange County and the campus of Chapman University, this is the Chapman Business Report.
Talking about the level of prices, are things getting frothy in the home and stock markets, and sundry other topics with the boss on this segment of the Chapman Business Report. I'm Pete Weitzer, joined by longtime economist here at Chapman University and also the head of the Anderson Center for Economic Research, Dr. Esmael Adibi. Well, I'm not the first. In the last couple of years, of course, people have been concerned while enjoying in their 401k, for instance, about the level of equity prices. We sit here again in the middle of April, and we're at record levels on every benchmark of the stock market. Are you concerned?
Yes.
I am. So you put in your short orders.
No, I'm a little concerned. No, see, when we say we're concerned, that doesn't mean people should do anything. Because if you want to time the market, you have to be right 2 times, and that's the problem. Once you have to get out and then go back in. So sometimes looking at young people, I say just forget it. Don't even look and let it go. Of course, if you get older like me, you can afford maybe 1 cycle or 2. So we have to be a little bit more conservative. But the reason I have a little bit of a concern because the market obviously made a fantastic run. Dow Jones from what was it, 6,500 at low, and now we're close to what, 18,000 over what? 5-6 years. That's fantastic increase.
But driven much less by earnings than it was by Federal Reserve policy.
Exactly.
Where else would you put your
money?
money?
Liquidity. The Federal Reserve pumped lots of money into the system.
Made the banks healthy.
Made the banks healthy, made the interest rates very low. So you as an investor, what options do you have? What are you going to do? Either you go to real estate or you go to equity market because the bond or CDs are not going to pay you anything. So part of that increase in averages, all averages, is because of that liquidity. Part of it is improving economy, there's no question. Earning improved and profitability improved, businesses went through cost cutting, so all of that is good. But now, I think we're at the level, like a threshold now. PEs are getting a little bit hefty, you're talking about 17, 18, 19 price earning ratio. And then, particularly this first quarter, I don't think the earnings are gonna be as good. Remember, multinational corporations, they make tons of their money overseas.
We're not a stock market show, but for instance, we've had in the last couple of months, up 300, down 300. One of the time-honored things to watch when you have that kind of volatility, right?
Yeah, there's volatility, and at the same time, the Fed is standing out there and just signaling that they might increase interest rates.
Probably their biggest signal in the last came the other day.
They're coming out much stronger, and we think they're going to start increasing it in September, the short-term rates. However, they're going to go like a turtle. It's not going to be like old days. They meet 8 times a year, and they would do quarter. But I don't think that's going to be the case. Maybe September a quarter and maybe 1 quarter at the end of the year. So that's not going to kill anything.
Let's say there is a 20% correction on the Dow, brings us down to 15,000. How calamitous would it be? I'm 20% in the stock market because most people are invested in their 401k, invested for the long haul. They won't feel that wealth effect, and some do borrow against that, borrow for their down payment. But would it be as calamitous as it might otherwise have been in prior decades?
I think so.
I
still think
20%
is very significant.
We could take 10%.
10% you can take.
Which
20%,
is the definition of
even if it is in your retirement account, it makes you feel poorer. And when you feel poorer, you're not going to go borrow and buy the car, or you're not going to take extra trips. So it would have negative effect if it's 20%. And most financial analysts, they don't anticipate 20% correction. And some actually argue it's good to get 10% correction, to get a little bit level off and get some of the stocks that are a little hefty to come to earth. So overall, the stock market is doing good. We think part of it is economy. Could be a potential for correction, but if the correction is manageable correction, not a big drop, I think it's not going to harm the economy because the fundamentals are good. We're creating jobs. Remember, that's Main Street, not Wall Street. People are finding jobs, they're generating income. That
Actually,
income
employers are finding it hard to find workers.
Yeah. In certain sectors, it is very difficult to find qualified workers. And more importantly,
because the labor force, one reason the labor force, they may not be qualified, but some are just not looking.
Yeah,
still.
the labor force participation dropped significantly.
What do you attribute that to?
Part of it,
they can see the economy's improving. They say this has been the highest level of classified ads, of looking for, of advertisements looking for workers that we've had in years.
Part of it, I think, the labor force participation. First, this is not a new phenomenon. It started from 2000, labor force participation dropping. But then it continued to drop during recession and during recovery, and now expansion. Part of it, I think, is a structural shift in the economy, that is, skill is becoming more important, and some people are out of what the skill needed. They don't match what is required in the job market. And some people basically age, maybe a little bit of early retirement, and maybe relying on their partner, to support. So it's a combination of the factors. But going back to just what you mentioned, which is a good sign of, economy, is a very strong sign. We have 5.1 million job openings. That's the highest we had since beginning of recession. And it's been creeping up. And at the same time, labor turnover is picking up. That is, people are quitting. It's very funny how it works. When quitting rate goes up, that's a sign of good economy, because people quit because
they're
they know
not
they
leaping
can.
without a net. You would assume they're not leaping without a net.
Exactly.
Yeah.
So I think underlying fundamental of the economy is pretty strong when you look at the job creation. But one negative there, income growth is slow. Although jobs are being created, people are not making as much as they used to, or those who have a job, they're not getting as much of a raise.
Sure.
That's a negative. But overall, again, if you think macroeconomics, last year the U.S. generated 3 million jobs. That means 3 million people are making additional income of whatever it is, $30,000, $40,000, $50,000. That's significant.
And we're back to, we've regained all the jobs we lost nationally.
Exactly.
And
in
in
California.
The state and
and
in
California. Orange County is about a month or two behind. It didn't capture everything.
Right.
And Sacramento is a little bit behind. For Orange County, we know why, because...
We just need Disney to open another gate.
Or financial activity and construction, that they went through this huge cutback.
Thousands.
Exactly. They did not catch up, and they're not going to catch up to what they used to be. That's
still a big employer in Orange County and throughout the state, the country, if you're in a developing area, is connected to development, residential development, commercial development as well. And home prices are back. New home sales are up. They flattened out a bit in the last 6 to 9 months. But are home sales back too much? We're within 10%, say, here in Orange County of where we were in 2007. And I believe in Northern California, they're making new highs.
Yeah, San Francisco is making new highs. Santa Clara is making new high. We are, every other area that we follow, they're below previous peak.
Which means affordability is
a
maybe
problem.
20% can afford the median
exactly.
home, right?
If you look at positive, negative, they're like countervailing forces. Job creation is positive for household formation, demand for housing, but housing affordability is not very favorable, and it's still getting a loan is a little bit hard. But on the supply side, we're seeing a little bit more activity from new buildings coming on the market. But what we call at the center, the housing market right now, is that it is normalizing, and it's a good news. See, if you look at 2000 and after, we had prices going up 10, 15%,
20%.
And then lost 10, 20, 30. I think we're entering the era that home prices appreciate 1 or 2% above inflation rate. And that's good news for everybody.
Sure, because you still get the tax benefit.
It's good for buyers, sellers, lender, anybody you name it. If home prices are increasing at a reasonable 3, 4, 5 percentage points.
Well, you get buyers, or you get the actual residents. I mean, you want some investment activity. We're getting and we're getting very little investment activity after that's what really brought the market back, right?
That brought it back, but now we're talking about...
I told you, we should have formed a fund.
Now we're talking about real buyers.
Right.
The people who find job or form families and they want to buy homes. But again, normalized housing market, 3, 4, 5% home prices increases is good for everybody, as I said.
And you're sticking with that because in your forecast you thought Orange
about
County,
5%.
even though we'd still get 5%.
Yeah.
Well, I promise folks, I know everyone loves to talk about the drought, just like they love to talk about healthcare, but it's a real problem. And aside from the fact that we need water and there may be penalties in some places, the other day, what they say, Beverly Hills are going to have to cut back 35% in Beverly Hills. Is this going to, would this affect your, just going to take a couple of points out of the growth in the economy and job growth? I mean,
it's not, yes, it's going to be negative, again, no question, but it's not going to be as significant as very many people say. First, let's admit that we neglected our infrastructure in the state. We neglected a whole
But
bunch
not
of
uniform.
things.
My water district board member friends tell me we neglected it less. We've built more reservoirs and dams and things here than they have in Northern California.
Yes, but if you remember...
Groundwater replenishment system, desalination, we've done all that here.
I agree. We did it in San Diego too, but not as much as we should have done. See, when our economy, we know where we live and we need water.
Right.
Water is critical. And our agriculture industry is so huge and depends on the water. And they use 80% of total consumption of the water. We should have done more to prevent this situation. Now, is it going to be negative? Of course it's going to be negative. There would be some crop reduction in production. There would be some higher cost. Maybe I just heard some tankers are going to bring waters for some people, especially in agriculture area. So we pay in form of high cost for the produce and some of the agriculture product. That's obviously bad for us. There would be some production reduction, which is bad for jobs in that sector. And at the same time, the water cost is going to go up. But what's funny, ironic, Pete, that I hear all of these mandatory, voluntary reduction. The best way is price system. Just, whatever the allocation is, just fix it through prices. If you increase the prices, people would respond much more aggressively than anything
I don't mean
else.
to make you a water expert. It's a very complex issue,
Yes.
but you think increase the prices so people would conserve
Sure,
conservation
they would.
alone.
At least those who have meters.
Right. And I haven't checked my almanac, but I understand the next few years might be a little better than the last 4.
Let's hope
that
so.
would certainly help. That's still where we get a fair amount.
Yes.
Many sources, Colorado River from the ground. Dr. Esmael Adibi, economist at Chapman University. Hadn't seen you in a while. You look good.
Me too. Yeah, thank you.
Okay, coming up, we've got a story about a business that's figured out a way to produce some good karma. Next segment of the Chapman Business Report.